Welcome back, options traders. Steve Gans here. And now we're going to look at the third in our Greek series, gamma. So let's take a look at the Greek of gamma and what that's all about. But before we do, again, just a quick review. What are options Greeks to begin with? Greeks are an instrument cluster. They're the gauges that options traders use to understand their positions. It'll help us in modeling out variations in stock price, variations in volatility, days to expiration. We can do a lot of what ifs to see exactly how our options that we own are going to react in those various environments. They're determined by a number of different potential formulas that can be used: the Black-Scholes model, the binomial model, trinomial model, and others. The most common are Black-Scholes and binomial. And most platforms will allow you the ability to select what specific modeling you want to use. It's also important to understand that Greeks are going to vary with the size of your position. If I have on a single long call, two long calls is going to have pretty much double the Greeks when we look at that. So keep that in mind as well. So what is gamma? Gamma is the rate of change of delta. Sounds a little confusing right now, but we're going to get into some examples that will hopefully make this a little clearer for you. Gamma, again, measures the rate of an option's delta change with respect to the change in price of the underlying asset. Gamma tells you how much it's going to change for every $1 change in the price of that underlying. Again, there will be an example in the next slide that I think will help. It's a positive number for long options, both calls and puts. It's a negative number for short options. This is because the delta of a call option increases as the price of the underlying goes up, while the delta of a put option decreases. Gamma could also be described as the stability of delta. The higher the gamma number, the faster the value of that option can change with moves in delta. In other words, it becomes a little more volatile as gamma gets higher. Gamma is highest for at-the-money options, and gamma decreases as you get further in or out of the money. So to help illustrate this, we can see that if we're trading an option that expires in 1 month, we can see that our gamma is fairly high there. At 3 months, our gamma is a little bit lower, and at 6 months, our gamma is lower yet. So again, the closer we get to expiration, the higher gamma is going to be. That means that as the price of your underlying moves, the value of your options is going to change faster, particularly if you're close to the money. Now, gamma as it relates to volatility. If volatility is low, it's going to basically, gamma is going to be higher. Gamma is going to change faster in a low IV environment than it is in a high IV environment. So if we take a look at the gamma lab here, again, coming back to option strat, going to come back to our same Apple position. Let me go ahead and open up option strat. So here we are, and if I look at my Greeks, I can see that my gamma here is a -2. Now, as I get closer to expiration, I'm going to come down here and I'm going to use this functionality again where I can specifically plot just gamma. And we can see here that as we get closer and closer to expiration at the money, our gamma gets much higher. This curve gets steeper, which means that as the price changes a little bit, it has a fairly sizable impact in gamma, which means it's going to have a fairly sizable impact in our underlying price of our option. And we can see here as we get very close to expiration, as gamma gets up into the 13 range or so. At that point, any move in this underlying is going to have a significant impact in gamma. Now we can come back also and look at volatility. That volatility flattens out. As volatility is higher, gamma is flatter. As volatility is lower, gamma will change a little bit faster. So again, gamma is the rate of change of delta. And again, as we get closer to expiration and this curve gets steeper, that is essentially gamma that is increasing in that process. That wraps up gamma, and we'll move on to our next Greek in the next episode. See you all there.